open for trade. And joining me now is Andrew Chamberlain, principal economist at Gusto. Andrew, welcome to the show.
It's so nice to be here, Ashley.
All right, so earlier this week, the Fed cut interest rates by 25 basis points for the third straight meeting. What did you take away from the decision and Powell's remarks after?
Well, I definitely think the Fed made the right call, no question. Like in our data, the labor market has been weakening so much, even for small businesses, that it makes sense to make this move right now. So in our data, we saw job losses in October, where there wasn't a BLS report in October, but we saw 37,000 job losses. Then we saw another 2,000 losses last month. And I think that this quarter point reduction absolutely was the right call. You got to keep in mind, like more than half of small businesses use some kind of borrowing, like they're using business credit cards to cover payroll and things like that. Those rates are still very elevated. And so this rate cut is the right thing basically to shore up the weakening labor market today.
All right, and what do you think the Fed's rate cut timeline says about the job market, which of course is one part of its dual mandate?
Yeah, I mean, the Fed is in a very difficult position, as everyone knows. Like, inflation is still slightly above the Fed target rate. However, much of what has caused inflation to tick up toward 3%, it's been like transitory tariff effects. Those are not going to last forever. However, the labor market is still in this hangover position after, it's a very high inflation period. Like, if you look throughout history, you always see that after periods of high inflation, the Fed takes an aggressive action with interest rates, and there's like a slow hangover for years afterwards. Basically, the labor market is in kind of a frozen position today. The Fed really needs to normalize rates, get them back down to the 3% range, hopefully in 2026, and that will help kind of reignite business hiring, and it will be the lever that I think unlocks a lot of growth in the next 2 years.
All right, and the BLS is going to release the November jobs report on Tuesday. What do you think we're going to see?
Well, it's a big mystery, right? Because we didn't get an October jobs report because of the federal government shutdown. And unfortunately, for a whole bunch of metrics, we're never going to get the October numbers. Those data are just gone. So private providers like Gusto, we've been filling in the gaps with our own labor market report. I think very likely what we're going to see is some small job losses in November. That's basically what we saw, 2,000 net job losses for small businesses overall. Our jobs report is for small businesses, less than 50 employees. That covers about a third of what the jobs report is. So I think we're going to see a relatively weak November. And I think it's going to basically support that motion by the Fed that the labor market there's so much at stake in the weakening labor market that's the right call to make, is to loosen up rates and move us in that expansionary monetary policy position.
All right, and you just mentioned the Gusto Small Business Jobs Report, which you released this week. What were some of the biggest takeaways from that?
Well, the big takeaway is that if you look over the last few years, the labor market definitely has been slowing down and kind of freezing up. Hires and separations are down. Overall, I mentioned we had slight job losses in November. But below the surface, there's actually very interesting stories happening with small business. Healthcare, construction, and finance are doing quite well right now, like adding lots of jobs. On the other hand, retail, restaurants, and accommodations had a very weak month in November, like the worst in 4 years. So basically what we're seeing is, like, as we go into this holiday season, we're expecting a pretty gloomy holiday season for brick and mortar retailers. However, there's some bright spots for e-commerce because transportation and warehousing and wholesale did quite well, which are more in line with those sectors.
I know you mentioned that hiring has slowed down, but are small businesses still hiring, or do you think Main Street is in the midst of a stall or a larger decline that we might see moving forward?
My take is that the last few months of data show a weakening labor market, and partly this is because of uncertainty and pessimism in the small business community. They've seen consumer confidence at a rate that's so low, according to the University of Michigan survey. consumers haven't been this pessimistic since the financial crisis in 2008-9. So understandably, they dialed back hiring. But when you look below the surface, all of the fundamentals in the small business economy are very, very strong. We still have strong GDP growth. Inflation is coming down into check. We have relatively good consumer spending. And so my view is that the only thing holding back small business hiring is uncertainty. Uncertainty due to tariffs, uncertainty due to affordability and business costs, and uncertainty about the way AI will affect jobs. But I think as the Fed starts to lower those rates next year, I'm quite optimistic that we're going to see a turnaround. I don't think we're in the midst of any kind of larger decline right now.
All right, thank you, Andrew Chamberlain, principal economist at Gusto. Thanks for joining us.
Thanks, Ashley.